Hello and welcome on Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Ocugen Incorporated, traded at Nasdaq, ticker name OCGN. Well, OCGN is a company that attracts a lot of attention for two major reasons. It's showing enormous volatility, going off directions up and downwards. You can see that just in let's say in December action it was at the level of 0.31 relatively speaking numbers, and then it went all the way to incredibly almost 17, actually 18, 10, even higher, and now it's being traded at 652. So just within let's say a very short period of time, just within a few months, such an enormous changes in price. And of course this stock attracts a lot of attention, and people still hope to trade further with a nice, let's say, volatilities and profit making. But still, we see that already from mid of February, we are in kind of a major corrective linear decline. If you look at the channel of decline, you can see that we are going down already, and relatively speaking, it's quite a big number, because if you look at this really classical, nice, straight formed channel, so let's a little bit magnify. So you can see that this channel is really already a long time there, and we are currently at the top of it, and this looks to be really consistent, confirmed many times. So now the question is, what's next? Because overall, what you see here, we saw actually a second wave of growth. If you look here a little bit bigger scale, the first wave of growth started, as I said, by mid of December, and also all three moving averages went in the classical growth regime, when moving average 20, 50 and 200 were one below each other and price was on top of it. Then what we had in beginning of February, here we had formation of the second wave, when again we started in price increase, but now we're declining, and also moving averages confirm this action after being overbought in mid of February by RSI. So we are actually declining straightly. Now we were recently just touching oversold area, now almost in the middle, 97 RSI wise, and all three moving averages are declining. Moving average 20 is bending downwards. All others are also decelerating, so their second derivative is smaller than zero. And moving average 50 just started to bend downwards as well. So meaning that it's still not the end. Probably we might still observe further, let's say, decline. It will be seen actually by next days, because now what we have, the price, let's magnify it back. So we see that the price is in the vicinity of the top of the declining channel, and also it's just touching moving average 20, this green line. And usually on these descending patterns, moving average 20 works as a very strong resist, and once it is broken upwards, it means that the decline is about to stop, about to reverse. Until we don't have these indications, so we still need to be careful here. But overall, of course, if it is confirmed, if we pierce higher, it might mean that we might have even for third wave. Otherwise, we will continue declining, and the most safe way to trade here would be just staying within the channel, buying lower part of the channel, selling upper part of the channel until we have a major recovery. So this is the major course of action, until we have, let's say, change of the pattern confirmed. Still, of parameters that say that we still might actually be already close to change of the trend is the volume traded today. You see it's really high, and you can see that people still have this belief that we might pierce further. We will see tomorrow if it will be confirmed or not, because indeed the volume traded today is quite high, and it's higher than the noise, than the average. Also, MACD wise, we are about to form actually the breakage towards a positive area, so it might be that we are going to have positive wave starting, which could mean that still we will pierce higher. And also you can see that there is of course a lot of space to recovery, because, well, not completely recovery, but just to go slightly to the next levels of support resist, because the next level where we could still observe some price going is actually this one. It's almost 2 times high, it's 1220. So there is a lot of hope, at least for one spike before we go for secondary declining wave. So if this is happening, this will be kind of zigzagging. So this is going down, then we might have a small, well, actually relatively big, but move up, and then actually continue declining further. So if this pattern is confirmed, we will see later, but for now, as a daily traders, we just need to know how to enter here and how to make the trade. So let's quickly do this analysis. So first of all, of course, we need to appreciate possibility to pierce higher if this is going to happen. But looking after hours trade, you see we're minus 1.38%, so still some volatility might be happening tomorrow. Therefore, the first level to buy here would be advised just inside, let's say, of the current shadow of the current trade that was happening today, which will be between 580 and actually 673. The reason for that is we don't want to lose the moment if we are really about to let's say break in north direction and going high. So we want to catch this moment. So this will be then for us 580 to 673. So this will be the first call out. Let's put it here for us. And then, of course, if this works, okay, price will go high. We can, for at least for midterm traders, we could wait until the resist level of 1220. More quicker way to trade would be just until moving average 50, which will be 848, 45, because moving average 50, the blue line also will work as a very strong resist here. So there will be 2 levels of resist. One will be, as I said, at 1220, let's call it R1, and actually second level of resist will be just here at 822, so we can call it R2. So until these two are pierced, we don't have a major new upwards move, and we can only play on descending waves with just bounces back. So this will be first entry. Still, we also could neglect this, and we could decline all the way, let's say, and go to the bottom of the current channel. If this is going to happen, we need to be prepared, of course, also to enter safely, which is still technically possible. And if this is going to happen, the next level to buy through will be actually in this area. It will be between actually the current bottom being 369, and we could go somewhere to the bottom of the current channel, which will be 435. So 435 and 369 as another call out, as another channel to buy through. Let's write it here for ourselves. This is still within, let's say, technical volatility where we could enter, and still, if the descending channel that we observe here is again working, it's engaged in play, we can still play there and buy with these levels and hoping for rebounds to make the profit. And again, speaking of profit, we always need to keep in mind that there is a limit to take the profit. We don't want, of course, to become rich from one trade. This is just not possible. So when we speak of profit, usually we advise 10 to 15%, but because this chart is extremely fastly moving, we advise to take the profit at 15 to 20%. Once you have this profit of all money allocated into this position, really take it, re-enter if needed, or check other opportunities. I always keep saying this, you always can find something at our channel as well, but also at other channels. So try to trade many times, multiple times with profit. Really develop this strategy. Otherwise, if you try to become rich from one trade or you bet on one trade, actually this is not stocks trading, it's more like a casino style. But casino also works sometimes, though not discussed at our channel. So with this being said, these are two technical levels. What still is possible, we might have a negative catalyst kicking in, because this might then send the price really low. And the reason for that, because you can see we did start from very low, and there are some levels to where the price could decline. Still, we have here moving average 200, the red line, as a very strong, actually, is a very strong support level, but this might be pierced even lower a little bit. So we need to keep this in mind. And what does it mean to keep some funds to mitigate negative catalyst? It means that we need to keep funds for the very principal level of trade. And this would be here, if you look at the chart, between 165 and actually 229, because from there at least we should have a major rebounds of the price. So let's write it here for ourselves. This would be the third level, and based on really the, let's say, principal level of support, which will work as a very strong, let's say, averaging down opportunity if a negative catalyst kicks in. So with this being said, these are 3 levels here to buy. So let's put them one by one that you can see. So these are the 3 levels. Again, it's not that we say the price will go that low, because you can see already it's 3 times of the current price levels. It's just to mitigate risks if it goes there, because we don't discuss stop losses, we don't discuss kind of these quick trading strategies where you cut loss, re-enter or something like that. We usually follow a different approach. It's an approach where you might spend a little bit more time, but you buy through slowly. You buy through the principal channels and buy in non-linearly. So it's so-called mixed analysis, where we combine 3 in 1. So first is technical chart analysis. Second is non-linear averaging down based on support resist levels. And the third one is actually risk mitigation due to possible negative catalysts coming in. Because if you mitigate all possible risks, what remains for you is taking the profit. And that's the philosophy of that we follow at our channel. So with this being said, these are 3 levels to buy, and asking yourself how to buy through. Of course, it's a non-linear averaging down, meaning that we want to buy with different portions. Usually we advise 5 portion play, but because here it could be extremely, let's say, volatile, and still there is a high chance that we will go a little bit lower in the levels, it's advised to play with 4 portions, meaning that the money you would like to play here, you can split in 4, and then you can buy with 1 portion in the first channel. Then you can average down with another 1 portion if we go to the second channel, so we can buy with that portion through the channel. And if we have a negative catalyst and price declines really low, you can average down with the remaining 2 portions there, and then prepare again for profit taking immediately once the rebounds takes place, and you have from 15 to 20%. So this is the way to play with OCGN. Again, the most expected trade is to rebound from the first channel, but we could still technically decline, which is second channel, or we could decline based on news, which would be the third channel. So with these 3 mitigated, should be quite safe and nice trade. So good luck with Ocugen, and see you at another episodes of Stocks Advisor channel.